So there, what we do, for example, what I do is we have three buckets of strategies. One is more stock futures, market neutral. So there it is like based on different factor models. Like let's take a simple one like momentum, which I think everyone broadly knows about. In last few years, there have been many long only funds also on the momentum side, both on the mutual fund and the PMS side. So what we would do is on that factor, we would rank the top 100 stocks, take the top 20 to long and the bottom 20 to short in an equal weighted manner. So it becomes like market neutral. So you have zero exposure to the markets, but you know that that theme, even while being market neutral, makes 10, 12, 14% returns over the year. That's what the data shows. And therefore it becomes interesting, right? And then not one, but there will be four, five different models like that, which we try and mix. So I have some momentum, some volatility, some sector rotation, some very short-term momentum models like that mixed on that side. But that is all stock futures based market neutral strategies. Then we have a bucket which is relative value, where we'll do volatility arbitrage, volatility dispersion type of trades also. And then we'll do things what is loosely called special situations, in which, for example, merger arbitrage is something that I do very actively. And then the third bucket for me is index futures and options. So, which is again a mix for me, it is a mix between index futures and index options. But there are again many managers who would trade only index options or largely index options. And that is to do because India has become one of the most liquid index options markets in the world, second only to S&P. Right. So because of that, obviously there's a lot of liquidity, a lot of depth, even when you are scaling up. And it also means you can do many different types of strategies. So any strategy on the option side that you can think of, it is possible to implement it in India on the Nifty index especially, right? So that is why there are a lot of only option plays also. But like I said earlier, that because I like to combine many different non-correlated strategies, so therefore I have these kind of three buckets, and within each also many different types of sub-strategies. So these are the things that are happening already in India. What is more common though, as I said, is all these option-based strategies, whether discretionary or more systematic and quant guys. There is a whole host of people on the institutional side between funds and prop desks and even global firms who are active on the index option side. But index futures, like managed futures, trend following kind of things, which again, globally, there are a lot of large hedge funds in that space. And that is where, I also spent many years focusing on those kind of strategies between an India fund and an Asia fund also I was managing. Those kind of things are still very not common and very less in India as of now. So I think there is a big scope to do a lot of things on that side. And second, the market neutral, while I do it as one bucket, but again, that is not very common at all. So obviously for me, it is interesting because that means there'll be alpha there. But also it is very scalable. So while if you look at a few single stock futures and very short-term trades, it may not be. But the moment you start mixing weekly, fortnightly, monthly strategies, then and you combine the top 100 liquid stock futures in different ways, then there is a lot of scale that is possible there also. So I think on the managed futures trend following side and the market neutral side, there's a lot that can be done in India and can be scaled up as well, but is not so common. And index option side, pretty much all types of strategies people are doing.
And you've told us, how your bucket is split up in so many different strategies. Could you tell us what your overarching philosophy is when it comes to hedging these relatively large portfolios?
Low risk and hedged to begin with, but whatever is not, like let's say a long only. So the other fund I have is what is called DEAR fund, right? Dynamic Equity Asymmetric Returns. That is a long biased fund, right?